Hello, welcome to the weekend market review. It is Sunday, October 22nd, 2023. Hard to believe that Halloween is not that far away. We're talking about after next week, not not tomorrow, but the next Monday, the end of the month. So tax loss selling will continue until then. Okay, so let's qualify how the market behaved this past couple weeks with tax loss selling is a big part of the selling now on bonds with the expectation that I can suffer another 5 to 10% pain, and the market give me just that. Okay, can it go lower? uh, I want to see what this line is because I'm sure it's drawn in a long time ago. Where is it? Okay, it's a down channel. Okay, so you get down, low, high, low, breach. Okay, so it depend on various different channel and downtrend. No doubt this is one of them. Okay, so you got here, it hit, it breach, it bounced back. And so can we go to 80? Wall Street Journal that will talk about, oh, the long-term rate is gonna get, double digit this and that because, whatever reason they want to throw out there. Can it get there? I don't think so. I'm not in that camp, but it's all depend on how the consumer break, right? Depend on rate, and I do believe consumer is breaking. It's not part of the problem. Okay, I want to spend a big part of this live stream talking about this topic instead of like looking at individual stock because really it's beating a dead horse. Okay, for those that watched my channel, my stream for a long time, much of what I will talk about as far as individual stocks is not going to be news. If it is, you have your head in the sand the past 6 months. But let me talk about inflation and high rate. Needs to break something in order to bring on a recession. Okay, there's no Fed is gonna go on the podium and say that we want a recession. Okay, they will be caught and it's slipped by people's brain because a lot of this does. Okay, a lot of what I talk about, for whatever reason, people forget sometimes very quickly because that's how humans behave. And I had this discussion with a young banker at the bank last week when I went in there to buy an 11 months CD for 5.26%, and I will continue to do that. If rate go up even more, you bet next week I will go in and buy another CD if rate is higher or the same. 5.26 for 11 month CD, that's pretty sweet. Now, if I can get a 6 month CD for 5%, I will do that too. Shorten my time frame because, of course, if for those that know how CD work, if I buy a CD last week for 5.26%, 11 months, then after 11 months, it's gonna mature, and I have a so if I can buy a shorter term rate, I might do that in case expectation is in 6 months. Now, when I was at the bank, I had the conversation with a young banker, and he and I talked about he was worried about the economy, worried about high interest rate, worried about his job. He's 32 years old. Just that is high enough that he's uncomfortable about making the monthly payment and worrying about his job. But I told him to put things in millions, and hypothetically speaking, for this example, when those treasuries mature or is maturing or will mature by 2025, do you think the Fed has the money to pay off the maturity of those bonds? The answer is obvious, no. So what would they have to do? They would have to issue new bonds to roll over those debt. So if they issue 10 trillions of treasuries that will mature in 2025, they will then have to reissue another trillions, another whatever trillions they need to do to pay off those mature treasury. But would they like to do that at 5%, 6%, 8%, 10%, as some people predict? Or do you think they would rather reissue new bonds to pay off the current bond at the 1 or 2%, at 5, 6, 7, 8, or 10%, as many people or some people predict? It's nonsense. Okay, stop the nonsense. Stop repeating nonsense because it's purely stupidity. Okay, let me be very blunt. It cannot be done. Now, the housing market has rolled over. Okay, if you look at the data in the housing market, it has rolled over. The problem with the housing market is a big part of the component of the CPI is the rental market. About the rental market, a lot of big market that have high rent has significantly changed in that they are offering big incentive from free 2 months up to free 3 months. That's the problem with the rental market right now. Is rent is not going up for the most part in most states, but because renters are offering concession 2 to 3 months of free rent instead of, but by doing so, it keeps the rent high because they don't want to lower the rent. They rather give concession. So that's part of the problem with the flatlining. That's what the Fed is saying, and that is to blame. Okay, people incapable of cutting back spending until they get the pink slip. Landlord giving great concession on the rent asking instead of cutting prices because why? It's simple. Okay, it's greed because if you give concession, sure, you're taking 25% less, but you don't have to cut the prices on in the future when the lease run out. Say, let's say the economy improve in 9 months and you have some of your units going back into the market. If the economy recover in 9 months, which is delusional, in 9 months we'll be in deep recession. So whatever to concede that a year from now they need to do it. What happens if we're in a deep recession a year from now? Yeah, they're gonna have to cut rent or give more concession, right? So yes, right now it's delusional, greed, play into the psychology of landlord because God forbid raising rent by 100% over the past 3 years. It's psychology, okay? And as stubborn as the consumers have been, there is a breaking point, and the housing market is the start of that. I think the next one that we are seeing already will be the auto market. If you drive across many dealers' lot, they are no longer empty. You don't hear, not yet. But at the same time, there is no one that is saying that there's no cars to buy. The car price is too high in a lot, yes. But the lots have plenty of choices, okay? And I think a lot of people will have a hard time getting a loan at the bank because as capital costs go up, banks have no choice but tightening lending standard, okay? And it is what it is, okay? As much as I hate what they did, somebody did a survey, but it's announced on CNBC that the average American, based on the survey, is looking to spend more this Christmas season than last year. That is how ludicrous things are. We have people complaining endlessly everywhere about everything too expensive, inflation, this and that, can't pay the bills, and yet the surveys say people. And the first thing I want to see break is the housing and then auto market. And as painful it is for TLT to be down here, I want TLT to stay down here. I want it to stay for the next week or 2 or 3, stay down here so that the mortgage market will implode. Okay, we need the mortgage market to completely fall apart with 30-year mortgage rate at 8.4, 8.5%. Yeah, we need that. We need the sticker shock to hit the consumer so that they stop. No other way. Okay, no other way. Okay. All right. SPY. Yeah. Danger zone. Danger. Okay. Danger. We have falling out of the channel. You know me. I talk about channel, and falling out of the channel is always danger. Okay. We flirt with the channel, and then we completely fall out of the channel. It better get back in the channel. Okay. So I don't know what the reason is, but you want to see it back in the channel. If not, then you can see something ugly. Okay, I forget about the 50, the 100-day moving average. You know that wouldn't be hard to breach. Okay, if we fall out the channel and we can look at another potentially a channel. Okay, potentially a new channel. Let's see if there's a. Okay, that's one. Let's duplicate this. Let's drag this up. Okay. Oh, how's it not working? Okay. That's why I said, it would be easy to visit. I'm not going to change the color yet because that's not quite. But yeah, we can look at a downward channel. So watch out. Okay, because to me, if it come down here, 416, 415 between there, that could be the buy zone. But until then, I said no rush to get in there. Okay, no rush. It's literally only 1.5% below. Okay, it's not that far below, so you can get there in a hurry. Tax loss selling is still going on. Okay, well, tax loss selling. Okay, QQQ, same thing here. Not good. Okay, out the channel. Earning this week. We have a lot of big tech earning this week. Google. Okay, but we'll see. There had been a lot of good earning last week, and for the most part, they was not rewarded. Okay, so that's a hard thing. The hard thing is, sure, there have been plenty of good earning that was not rewarded. Look at Pepsi. Okay, Pepsi had very good earning, didn't do much. JP Morgan, good earning, didn't do much. Bank of America, same. So is it going to be different with tech? I don't know. Okay, I don't know. We will see. For the bulls, they are hoping for that. Okay. the Dow Jones. All right. I was wrong. Okay, I thought it was days. I thought I was looking at the day chart, but it was a week chart. So yes, this has been even clearer as far as breaking the channel for the QQQ, trying to get back in the channel, not having it. Okay, so ref low for QQQ is not that far below. You literally have 1%. Okay, I think if that breach maybe 350, we can we see the 200? Yeah, why not? Okay, why not? The last time it was here was way back in March, before the bull run, before the NVIDIA AI run, right? The Middle East, Lockheed Martin. If you follow the news, we are sending. Oh, and this is part of the problem with inflation is the Fed is trying to tighten, the Fed is trying to slow down, and the politician want to give more money to Ukraine and Israel, 100 billion plus. So there you go. Okay, this is part of the reason why the Fed is not getting the result because the government, the politicians are printing money. Okay, it's one of those things where fiscal policy is not working for the Fed, and the Fed has no control over the politicians. Okay, so you can blame the consumers, it's part of the problem, but blame the politician for keep wanting to spend more money for weapons. Um, as far as Lockheed Martin, yeah, I still like. He just sent some new latest greatest long range rockets to Ukraine, and they are from Lockheed Martin. Okay, so if you see the news of the new rockets launch system that we sent Ukraine the last few days, it is Lockheed Martin rockets. So yeah, Raytheon, I don't hate. Okay, so let's jump into the banks. Ugly. Goldman Sachs, I did nibble, I did add, and I will like the shoulder pattern like this, right? You can look at this and say, okay, shoulder, head, shoulder, right? And you can look at this line right here is the neckline. And guess what? If it is, we have a long way to go. Okay, so not is to play out. For me, whenever I see a potential head and shoulder pattern, what I do is I look at where the potential fall. Yes, I'm that bad. I need to get out my calculator. I'm old. uh, but that's like a 42-point drop. Okay, so if you take the 42-point drop from 318, you can look at 276. So 275, 276 is the completion of the head and shoulder pattern. And would you believe it's right there? Isn't it magical? Whenever the TA come into play and it looks so um, how to say, it's a lot of time it surprised me. Okay, a lot of time, like I said, I didn't look at this ahead of time. I'm just doing the math right in front of you live, and yeah, how nice is it to line up so perfectly with the ref low going back 2 years. Yeah, so yeah, for Goldman Sachs it can get that ugly if the head and shoulder pattern goes. That's why I buy small. Okay, I literally have like I think 10 shares or 12 shares, so yeah, it's not like a lot. It's been a long time since I have a big position in Goldman Sachs, but yeah, down there it will go. KRE, ugly. I did close. I had two put spread. One expiring last Friday that I closed. I mean, I sold those put spread a long time ago. I sold those put spread back in August, I believe. So even though KRE is below 40, it was still a small profit. Now I have another one for the same strike price expiring this Friday, and that one might be a small loss. Okay, but I'm in no hurry to add to KRE here, but I might. I have to let the week play out. Okay, I have to let the week play out to see if it's worth letting that assign. I don't mind to have it assigned. Okay, but because I have one expiring this week, that last Friday, I said to myself, no need to buy let the one assign. Plus, it was in the profit. It was in profit, so I said, let's close it and let the other one ride. And most likely, I will let it assign and buy my share there because I like it. I like the risk reward, getting the share assigned at 40 strike price here. Okay, with tax loss selling finishing. So I think the risk reward now is to go long. Okay, I've been talking about the threats of Tesla selling ever since this drop, right? And then got the smack, and as always, it got back to rev high. Okay, I can't stress enough that in this market, if you are going to be trading, do not be stubborn. Okay, if you are buying ELV up here, I don't know what you are doing. Okay, if you want to buy ELV down here, be my guest. I missed this one. I trade ELV very well for a long time, but I missed this move here, and I was not gonna chase it, and it got whacked. Okay, UNH. Wow. Okay, wow. But still, long UNH, which I would probably trim here because it was getting into rev high, right? And then there's a trend, downtrend, that could be the support, right? So yeah, for me, no need to touch that. No, don't let greed knock you down. You can give up 20 bucks real quick in a hurry, okay? So be careful. I say it's time to go. Cigna, time to go. DGX. I did not add anymore last week. I add, you know, when it was below 122, you bet I add, okay? But I did not add to Pharma. Eli Lilly, wow, took a beating. I reacquire some shares. Would I buy more down here? Yeah, 566, 568, between that. I would nibble more, but hey, it had a huge run. This was insane. Okay, this was an insane move, and it can retrace. Hey, the last time it went crazy, it retraced and violated the 50 for a couple days, so it can come back down there. Yeah, even though the 50 is literally $50 higher. Crazy. Okay, super crazy. So JSK, I add. I bought very small. Okay, but I finally re-enter after completely exit. Would I add more? Be patient. You know, 34, yes. Between in this zone, go big. Okay, I will go big. I bought a little bit. I might buy a little bit more at 35 at the gap, like in the gap fill. Okay, there's a gap fill right here at 34.76. That's where my next order is. Okay, but if that fail, then 34, 30, between 34 and 33, yeah, add a whole lot. I got a lot of room to add. I exited 600 shares. Right now, I literally have 10. Very small. J&J. Oh, I had a put spread 152.5, 150, and I had to watch that closely Friday. I closed it out near the end before, I didn't want to like wait until like 4 p.m. Didn't want to sit around, but I made some little money, but it was dicey. It was dicey, especially on Thursday when J&J was way down here. So if I was to sell put spread here, I'm going to go 150, 145. Okay, so yeah, I'm not going to do, I'm going to try to use the ref low at 150 as my last line of defense, right? But yeah, it's once again, head and shoulder. Okay, this is why it's dicey. Shoulder, head, shoulder, neckline. Okay, so yeah, it can be ugly. I think I talked about this last video, so I don't need to illustrate the math on that one. So just be careful. All right, let's take a look at tech. Google. The strongest of the strong, but if there is a sell-off on earning, if there's a if the earning is good, forecast is good, and there is some kind of sell-off, knee-jerk reaction, yeah, buy. 133. I would love to buy some at 133. I would love to buy even more at 129. So yeah, I will definitely throw. I don't mind buying back at 300 all day long. Yeah, I like that. I like that a lot. So yeah, if it come down to 300, I will buy back all the share I trim at 297 in case it overshoot the 100 MA. Yeah, I like it. I like those two. Amazon into the about Apple. Would I add at 170? Yeah. If you want to add 170, 169-ish, use a 200 MA if you want to. Or if you want to be even safer, put an order in at 168, 167 down there to see. You know. But yeah, yeah. To me, it's yeah, it's. I would rather sell put spread. Okay, for me, I would rather sell put spread than buying the share here. I would sell say 160, 155 down here. I don't mind buying 100 shares at 160 down there. Tesla, ugh, oof, oof. Into the red flow it went, okay, into the 200-day moving average, everything. So this is it. It better hold. If not, we can see 193. I bought at the gap fill. Well, I bought twice. I bought at the gap up right here on that day, and then I bought at the gap fill. And then I said, let's wait. I might bought one more time at the 200-day moving average. Okay, so maybe 3 times. But small, but very small. And I think if that fail for NVIDIA, what's next? I don't know. Okay, but I think it can easily get there and complete the head and shoulder pattern, and then it better reverse. If not, and start to test this lower area, that's the thing. Whenever you have the shoulder, head, shoulder, you will see some kind of test of this zone to see if it's going to break. Okay, so we'll see. But for now, right now, I do not. Tax loss selling is near the end. Um, it's hard to say. Okay, Nvidia has been tough for many people. It was great, but hey, it's near. If you are a buy and hold kind of person over the last 3 months, most likely you're not. Most likely you down. Okay, if you didn't trade, unless you're lucky enough to buy at 406, 407, 408, the 20 MA, a good thing. Okay, a good thing. Does that mean that the tax loss selling is done? Who knows? Could be. Okay, this is encouraging. It's encouraging to see this kind of movement. So I don't hate it. Okay, I don't love it. I don't hate it. Let it be. Let's take a look at you know other medical devices are just getting walloped too, like Intuitive Surgical. Believe it or not, it's holding up better than I thought. For those who remember, I went very negative on ISRG a month ago or longer because of the weight loss drugs. ISRG make a lot of money with the surgery for people's stomach. But Medtronic, ugly. But let's see how it plays out with earning. The tax loss season's over. Could be a rebound. Same thing with Edward. Okay, ugly, super ugly, flat lining. So yeah, I do think the bottom is in for many of these companies because they suffer 3 months of tax loss selling already, and it's holding the line. It's holding the bottom. It's okay. There's no need to add. There will be time to add, I think, soon. Martin Marietta. If you buy for a trade, here is a spot to buy. Okay, I would say it's a spot to buy down to $3.99. I have ordered in to buy at $3.99. I sold out of BMC. I'm glad I did. I sold out. The last of it was 212 something. Okay, I had a stop in, and boom, it happened, and it's gone. Okay, it's gone. Would I buy back BMC? Yeah, 199 down to 196. It can move. It can move $10, $15 in a hurry. In a hurry. As far as Coke, same. Okay, we'll see if we can hold the 20. Going to have good earnings. Okay, it's just that the market does not like those stocks right now, unlike the healthcare. But even in healthcare, okay, you gotta get in, get out quick. CMG, still don't like it. Okay, it's good that it's back above the 200. Okay, but no, I don't like it here. What was it? There was a stock that I want to talk about, but it slipped my mind what it is. So, I tend to jump all over sector to sector, that sometimes I skip a stock and I just can't remember what it is I want to talk about. Oh, when I talk about NVIDIA, I should focus on some more chip like SMH. If you want to buy, I say wait until the confluence of the 200-day moving average and a channel low. Okay, I think 137 is a good spot for buy order for SMH if you want exposure there for a trade. Okay, the chip sector, Qualcomm, not huge fan here either. If you want to buy gap fill, okay, there's a little gap, but my God, I stay out of it. I stay out of it the past couple of weeks, and I'm thankful for it because it would have been very painful, because I would have sell put spread. Say I was selling put spread like 152.5, 150 up here when it was up here. Selling put spread down here in the 152 range, 152.5 was easy, right? But if I did that, oh yeah, it would have been pain. Okay, so how far can it go? How far can it go? We're almost there. Okay, so we're in that zone that I think is it's it's there. Okay, you look at often I said the buy zone is not just one price range, right? It's a zone. Okay, so yeah, I might add a little Texas Instrument here on further weakness into the zone. So I might put an order in to buy at 146. Okay. So any kind of wick down there, I think 146, 145, yeah, that might be the play. SMH, okay, there's a potential play right there. IBM. All right, I like IBM. I had ordered in to buy, but very small. Why? Because of another head, shoulder, head, shoulder. Even though it's, keep in mind, head and shoulder pattern does not have to be perfectly symmetrical. Okay, it doesn't have to be, but you had to keep in mind what can happen if it does play out that way. But for me, I don't mind adding small. My buy order is, I had buy order in at 138, and then I took it out. I leaving the 136 there and 135. Okay, so I wouldn't mind buying down there. Okay, I don't need to buy at 138 ish. Okay, because I think that's where it can go. And if that fail, then you know the head shoulder pattern is going to rocket down to this level down here. So we'll see. But I do like IBM. I like the old tech. I think that should do it for this week. I'm sure I left out a lot of stuff, but long enough, right? Thank you for watching. Be careful. This is the last week of tax selling, tax loss selling. Just